In the very near term, there's a lot of confidence, right? And I think that's a difficult environment for gold. With nominal interest rates rise, the attraction of standard deposit products, bank deposit products, short-term government bonds is high. There is less concern about the depreciation of the currency than I believe should be the case. But my belief is that gold is going to have a challenging period, flat to down through 2023. Doesn't mean I'm right. I continue to buy gold personally because I regard it as an insurance policy, and I would rather buy insurance when it's cheap than dear. But in answer to your question, I think that gold's going to be challenged in the near term because of relative strength in the bond market and the belief on the part of very large investors that the Fed has a reasonable chance of engineering a soft landing. A belief, by the way, that I don't share, but I don't make a market.
Rick Rule shares his insights on the near-term prospects of gold and the challenges it may face in the wake of rising interest rates. He discusses the allure of standard deposit products and short-term government bonds during uncertain times. While he personally considers gold an insurance policy, he believes it might encounter a flat to downward trend through 2023 due to strong competition from the bond market. But that's not all. Rick delves into his experience with political risk, asserting that there is no safe political jurisdiction worldwide. He reflects on his successes and failures in various jurisdictions, including Canada, Chile, and Russia. Furthermore, he emphasizes the importance of diversifying energy sources, arguing that clean energy should not overshadow the efficiency of fossil fuels in meeting the growing global energy demand. Finally, Rick reveals a startling statistic about the junior exploration industry, where a vast majority of businesses are lifestyle exercises or dreams, losing substantial sums of money each year. He then unveils the crucial 5% that stand out, adding legitimacy and luster to the sector. Don't miss the rest of Rick Rule's eye-opening revelations on the resource industry and the key to successful investment strategies. Stay tuned till the end to discover how you can navigate this complex landscape and make informed decisions.
I am much more oriented myself to deposit quality and political risk. I have the belief, with all due respect to Quebec, where we're sitting right now, that every political jurisdiction on the planet is lousy. Every single one. My biggest experience personally, worst experience personally with political risk, was in my home jurisdiction then, the People's Republic of California. I don't believe that there is a good jurisdiction. I believe that Agnico Eagle has a unique capability in northern Canada because they've been there for 40 years. They have experience with it. But personally, the best jurisdiction in my life was Chile. They have unfortunately decided to snatch defeat from the jaws of victory by changing politically. I guess my point is that there is no good thing as a safe political jurisdiction. There are jurisdictions where different management teams have demonstrated competence. And Agnico Eagle has demonstrated competence first in northern Canada, but specifically in Quebec. So for them, it's probably the best jurisdiction on the planet. For me, what I've learned is that my biggest risk is deposit risk. I don't worry too much about a government stealing something that isn't worth stealing. So my first risk is that what I discover is not economic and not worth stealing. I'll worry about political risk, which I do, after I worry about technical risk. If you want to look at the best jurisdiction in the world for me, money in, money out, not the one I made the most money in, but the best jurisdiction in the world for me, money in, money out, return on capital employed, was Congo. One of the worst jurisdictions in the world, politically. But the fact that I had no competition there, and I was able to participate in very, very, very high quality resources with top quality people at a price that reflected people's interpretation of the political risk, simply means that for me, it was the best jurisdiction I could have participated in. Now, much more recently, I've been a very successful investor for 20 years in Russia. That came to a screeching halt. You know, there is danger in playing the political risk game too hard. I mean, one of the beauties of Quebec is that there's a long-established mining business here, and there are some extremely high-quality people. I'm doing business now with a Quebec family, the Gignac family. I'm doing business with them in South America. But one of the greatest successes of my career was co-launched by Pierre Lassonde. More recently, André Gaumont. The beauty of Quebec for me is simply that there's a community here that I know and trust and love, and I've done business with them for 30 years. So the risk for me being associated with those people, not this place, those people, is nil, and they're here. The world needs all kinds of power. I've been invested myself from time to time in all forms of alternative energy. I've, built solar, wind, financed low-head hydro and geothermal, but that the world has invested almost $5 trillion in alternative energy in 40 years. $5 trillion. Let that sink in. We've reduced the market share of fossil fuels in that period of time from 82% all the way down to 81%. It's cost us $5 trillion to reduce the market share of fossil fuels by 1%. A billion people on Earth have no access to electricity. They want it. 2 billion people on Earth have access to intermittent or unaffordable electricity. I want more wind. I want more solar. They want more coal. They need more nuclear. There is a future for all kinds of energy. If you get too caught up in the so-called clean energy narrative, by the way, no energy is clean, you miss a world of opportunity, and you don't make the world a better place. You make the world a worse place. My suggestion is that when people focus myopically on clean energy, they forget the fact that fossil fuels are the most efficient economically form of energy that exists. And to deny their portfolios participation in that is silly. And for humankind to ignore the fact that a billion people on Earth would like to live like you and I, and will over the next 40 years, is naive. If you merged every junior in the world, not just the Canadians, but every junior in the world, there's probably, 2,500 of them? If you form one company, we'll call it Junior Explore Co. In a very good year, that business, Junior Explore Co., would lose $2 billion. That is expenditures over realizations through M&A or something else. In a very bad year, it would lose $6 billion. So you tell me, how much money would you spend for a business that loses $2 billion a year? Would you invest 8 times losses? 12 times losses? What's the right price-loss ratio? The industry as a whole is a destroyer of capital, not a creator of capital. That belies the point that 5% of the issuers, perhaps, maybe 10, generate such good performance that they add legitimacy and sometimes luster to a whole sector. So what I'm saying is that if you participate in juniors, you have to be extremely selective. 90% of them aren't businesses. They're lifestyle exercises or their dreams. 5% of them are shaped with businesses, but most investors spend too much time on narrative and not enough time on arithmetic. They don't get to know their companies well enough. A different statistic, and this is horrifying. A young intern of ours 20 years ago did a statistical sample for me of 25 randomly selected TSX junior resource companies. And among other things, he found out that the median expenditure among 25 companies was that over 60% of the capital raised went to general and administrative expense, and less than 40% went in the ground.